This is the briefing for Friday, May 5th. Well, we survived a pretty newsworthy week this week in the stock indices. We had the Fed announcement, the question and answer period with Chairman Powell, and then we had employment numbers that came out today. Now, I do have to say that this is one of the most difficult markets that I have been involved with for quite a long time in terms of trying to make a living, mainly because it is a very rotational market in multiple time frames. Now, I've been talking about this for quite some time, but I think it's really relative to what's happening. It makes even doing these briefings very difficult. You can see this is one time frame of rotation that we've seen, and this is another time frame of rotation that we're experiencing that is at the upper extreme of this area of rotation. Now, it is common for when a market or a financial instrument reaches support or resistance for the market or the instrument to pause. That's because traders, when they realize that price has reached support or resistance, they step back to see if there's enough strength in the market to continue the trend. And then you get these pause periods, unless there's a news event that'll drive price through a support or resistance. Then you get these pause periods where the market tries to determine, is it strong enough to get through here. Now, just looking at this week, this is a very important key reference area, this area of rotation, because breaking out of this is going to be a breakout in multiple time frames. In other words, it's breaking out of this area of rotation to the upside, and it's breaking out of this area of rotation to the upside. That should be a pretty significant move if it if it breaks out to the upside. On the other hand, if it breaks to the downside, then it's basically just another potential rotational pattern trading down to test the 380 area in the spiders, which is the lower extreme of this area of rotation here. Potentially breaking out down here would suggest a greater degree time and price breakout that would be a fairly substantial move, I would suggest, to the downside. Now, looking at this week, this was Monday's trading, and you can see we have a little bit, I hope you can see that, we have a little bit of a selling tail that came in here as the traders tried to trade above the 415, 420 area that is resistance, and selling came in and drove it back down. Tuesday we had another thrust lower, Wednesday another thrust lower, Thursday we tested support, and then of course bounced off of it, and then you can see what happened in today's trading. So basically we had a week of just a rotational pattern, really not giving us any clear direction of a breakout in one direction or another. Now, it appeared in yesterday's trading that there was a pretty good chance that we were going to break out to the downside, but it did not occur. We rotated back up going into the close, have a buying tail here, just like we had a selling tail here. Buyers came in and drove price up, and then of course we had this relief rally, or this pretty substantial rally in today's trading that brings us almost all the way back up to test the upper extreme once again. Now, one thing I want to point out, now this is volume for the spiders. So you can see on this move here that volume was fairly good in terms of the spiders. In fact, it was basically increasing. Now, this is volume for yesterday on the move lower, and you can see that it was less than what it was back here. And then, of course, in today's trading, volume is even less than it was previously. Now, one thing I have to say for today's trading is that breadth expanded and expanded pretty significantly. 52-week highs minus 52-week lows expanded, although still negative, about 28 shares. But breadth expanded, and it just expanded very, very nicely. And I pointed this out in last night's briefing, Thursday's briefing, that there was a divergence going into the low of yesterday. And you can see that right through here, this divergence in breadth, suggesting that the market was strengthening and that the potential for some type of pause or rotation up was certainly a greater probability. Surprised to see the extent of the move that we had in today's trading. Now, looking at the NASDAQ or the Qs, you can see we have basically the same situation here. We have this area of rotation to pause. The Qs, the NASDAQ, really a little bit stronger than the spiders. You can see that it's trading and closed just above resistance, which comes in right around the 323 area, 322 to 323 area. So it's going to be interesting. Now you can see back here once again on Monday's trading, we have a selling tail that came in. So it's going to be interesting to see if the Qs can hold the price where it is now. This being resistance, now support, since it closed just above this 322, 323 area. Once again, NASDAQ NASDAQ breadth, I should say, increased pretty substantially, strengthening. You can see the divergence between the lower low on Thursday, below Wednesday's low, and then suggesting a strengthening. And then, of course, we have this move to the upside in today's trading. I do have to say that breadth was fairly strong today. So it was a well-balanced rally to be sure. Now, looking at where we are in terms of the Russell, the IWM, you can see a completely different chart pattern here. The Russell is testing and rotating around the lower extreme of this area of rotation, whereas the other indices are rotating around the upper extreme of the area of rotation. The other thing is that you can see this is basically a downtrend in the Russell from April 18th through yesterday's trading. You can see that volume in the IWM was increasing. Now we did have this move higher, but you can see even on that move higher, volume was decreasing, and then began to increase once again, and then in today's trading decreased once again. This is pretty significant, I think. Now, basically, if we look at what's happening in terms of the Dow Industrials and the Dow Transports, now this is my trading view charts. This is the Dow Industrials up here. So you can see the rotational pattern they've been in. Tried to break out right through here right in March, but then traded right back up again. Look at what's happening with the transports. The transports are basically in a downtrend. If you look at this right from this high, going all the way down to the 13,200 level, basically in a downtrend. So what that tells me, and I've talked about this in previous briefings, is that when you see the transports and the Russell begin to trade lower, that usually is a fairly decent signal that the market is getting ready to turn. Now, it's not 100%, but it's something that I watch all the time. And certainly the transports and the Russell are turning lower, where the other indices, especially the NASDAQ was on fire in today's trading, appear to be trading higher. S&Ps, the spiders, seem to be unsure of whether they want to go higher or lower. But then again, you can see breadth was fairly strong in the Russell today. But it is, from a price development perspective, it is at and testing the lower extreme of this area of rotation. Now it is basically in the middle of this area of rotation. So what happens Monday is just going to be extremely important. Now, in terms of being overbought and oversold, the NYSE is at a point of being extremely overbought. The NASDAQ is not really at an extreme, at least as of yet. But this does not preclude the market from going higher in Monday's trading. Now, the key, and I pointed this out to the downside, or to the upside, was going to be what happens here. You can see here we have this divergence, and I pointed this out in Wednesday's briefing, that if there's a divergence on a lower low on Thursday, to watch for a strengthening. Now, the same is going to hold true if we get a higher high on Monday and breadth is weaker. That's going to suggest the higher probability of some type of rotation back to the downside. So just be cautious. Today was a very strong day in terms of price development. In terms of the internals, it was a fairly strong day. But my big concern still going forward is the lack of volume. And you can see that in the ETFs that I've been discussing right here. And you can also see it right here. This is total volume in the NYSE. Now, this is a basic upward slope, and now you have to look at this very carefully. If you go back to here, you can see where total volume was. Now, it is a downtrend right through here, so you can see volume increasing. Now, then we have this move right into into last Friday's trade where the market tested the upper extreme, and then we have this move to the downside once again coming into that, and you can see the volume increasing. And then today's trading, very interesting that volume fell off slightly in today's trading. Interestingly enough, this is NASDAQ, this is the Qs, this is NASDAQ total volume. Now, you can see price was in a rotational pattern in the NASDAQ, but volume was increasing. So there's a lot of trading that was going on within the NASDAQ, but it really there was really no thrust or no impulsiveness to it in either direction. Important to this was that if you see look at price where the line is and look at volume, and you can see that as price began to decline, volume began to increase even more going into Wednesday's trading. Then Thursday's trading, we had a slight fall off in volume. You can see that right there. And then in today's trading, testing the upper extreme, volume fell off even more in the NASDAQ. So volume is really the fuel that drives a trend. So basically, while breadth is important, and I watch it specifically for divergences, especially coming into key reference areas, it's really important that volume confirm the trend. This was really uncanny to see volume increasing through this rotational pattern. It did suggest the potential for a breakout, but that breakout has not occurred as of yet. But even as we came into Thursday's trading, we had lower volume. And then today on the huge rally we had, even lower volume than yesterday's trading. So basically for Monday, what's going to be important is the previous day's high and low. So if we look at where we are in terms of the indices, certainly you want to consider being long these spiders above 414, but resistance is going to come in at about 420, and you want to be short below about the 408 area. And that's going to suggest a test of this lower extreme down here. Now, even this is a 60-minute chart, so you can even see on an hourly basis the rotational pattern that is occurring, and that we may test this area up here on Monday. If there's a divergence in breadth, then expect this rotation back down again. Same thing is occurring in the NASDAQ. NASDAQ testing this high here, but look at volume in the Qs on an hourly basis falling off pretty dramatically. Certainly you want to be long above today's high in the Qs and short below about the 318 area. That would open up the short-term support at about the 315 area. And in the Qs, certainly, once again, long above today's high. That's going to resistance is going to come in right around the 176 area. Then above that is going to be about the 178 area, which is really important key reference area there. And certainly short below about 173 in the IWM. Once again, volume falling off, breadth increasing, breadth increasing. But breadth can change dramatically in Monday's trading. Once again, watch for divergences on higher prices on Monday. If breadth is as strong as it is, if volume is strengthening, then that's going to suggest a breakout to the upside. But we need to see volume continue to come in and continue to build. Have a great weekend, and I'll pick this back up again on Monday.